Hello friends, I am Abhishek Sharma. I welcome all of you, my respective senior members, my friends and my juniors as well. This topic is a very small on the base of the time, but very important for any particular entity to prepare the financial adjustment. So what is our today agenda we will discuss in the next slide. So let's start. So India's 10 is related to the event after the reporting periods. So in this NDS we will discuss the introduction about the what is the meaning and objective of the event of the reporting period in DS10, what are the non-adjusting and adjusting event, their accounting treatment of dividend especially given in NDS 10, fundamental assumptions going concern, what is the effect, what are those situations or the condition with example I mentioned in the slides, on the base of which a particular entity should review the fundamental assumptions of the going concerns. Then there is a disclosure, and I also mentioned the practical example, few examples of the disclosure point of view. Topic number 1, introduction to the event after reporting period. So what is the event after the reporting period? It means those events which may be favorable or unfavorable for a particular entity, and the occurrence of this event between the reporting period and the date of approval the financial statement for issue. So what is the end of the reporting period? So basically normally, as we know that our financial year closed in 31st March, so 95% cases it may be our end of the reporting period, but due to some statutory requirement it may be changed, but I don't think so there is any scenario as we have in India. Date of approval of financial statements are the date on which board of director approve the statement for issue to the shareholders. So it means the if you are preparing a draft of financial statement of 31st March, or this is not a date of approval. Once the board of director come together and discuss about to make a decision to approve this financial statement, and board of directors sign and these financial statements, so that is our date of approval. The main objective of the risk standard to enhance the reliability and the relevance of the financial statement for the user point of view. Means they want management should, it is a responsibility of the management that they should disclose all the necessary events that may impact the financial statement of a particular entity, which if these are occur after the balance sheet date, what should be the treatment, what the disclosure they have made in their financial statement. This is also very important point. So the main objective of this standard to enhance the reliability and the relevance for the financial statement for the user perspective. As I mentioned earlier, the date of approval for issue is normally the date of approval given on the board of directors for issue of the financial statements. So this is our topic number 1. Topic number 2, adjusting and non-adjusting event. So basically the event which occurred after the reporting period are divided into two categories. One is adjusting event, second is non-adjusting event. Adjusting event are those events which are based on the condition exist on the balance sheet date, and the management know about the conditions. Okay, but after the reporting period they get the additional information about that particular condition which exists on the balance sheet date, and they will make the adjustment accordingly in their financial statement. For example, company know that there someone has filed a suit against them and they are liable to, and there may be a chances or there may be a probability to increase the liability to pay the damage filer asking for. And after that 31st March, suppose on 10th of April, company lost the case and they are liable to pay the X number of amount to the litigant. So in that case this adjustment has to be made, or they have to make a new provision to settle this liabilities. Okay, non-adjusting event are those event which based on the condition that are not available or not exist on the balance sheet date. These three type of things happen after the balance sheet date. Suppose till 31st March company is not planning to acquire or dispose any of his undertaking, but after the after the 31st March board of directors feel that okay, we should have to dispose of this type of fixed assets or undertaking. So this is the non-adjusting event. So company has to make the disclosure, only to give the disclosure in the notes of account, which we will discuss later. So this type of things. I also mentioned the two example here. First, change in the tax rate after reporting period or increase of the contingent liability. In both cases, management does not know about the conditions about this situation happen on the 31st March. They just only get the estimates. Actual occurrence would be will happen after the balance sheet date. So this is the adjusting and non-adjusting event. So this is the one of the important type of event which happen after a post balance sheet item, that is dividend. So what the treatment of dividend as per AS 10. So dividend declared after reporting period shall not be recognized as a liability. First thing, AS1 in AS1 says that disclosure shall be made for the proposed or declared dividend made after reporting period but before approval of the financial statement. This is their Ind AS says. But as per Ind AS 10, it says dividend shall be recognized as a liability once it's approved, and dividend shall be measured based on the following: if the distribution through non-cash assets, so the fair value of assets shall be deemed to be a dividend amount, and if distribution through either cash or non-cash, it means company give a chance to their shareholders to get the dividend either in cash or non-cash, so the fair value of each assets plus the probability to choose the option by the shareholder to get the dividend. Okay, here I would like to clear one thing. As I mentioned that dividend shall be recognized as a liability once it's approved. So approved by whom? So it means when the dividend is appropriately approved, and so the date is when the declaration of the dividend by the management or a board of directors is approved by the relevant authority. It means that when the board of directors or management give their recommendations to the shareholders and shareholder give their approval, in that case this will be recognized as a liability. But if when the dividend is declared by the management or a board of director like interim dividend, in that for that case we does not require any approval from the shareholders. So in that case, that date we will be consider. So you can say one date may be become a adjusting event, other event would be considered as a non-adjusting event. Okay. 3.1 account is the second phase of the dividend treatment. So at the end of the reporting period and the date of the settlement, we regularly review the carrying amount of the dividend payable, or after making the review we should adjust the carrying amount of the dividend payable accordingly. If there is any change in the carrying amount, dividend shall be adjusted with the equity component. So definitely we should need a one offset of this. At the time of settlement, management will see what is the difference of the carrying amount of non-cash assets and the carrying amount of the dividend payable. If whatever dividend comes, it will go to the P&L account. So here as I mentioned to you, if management is declaring a dividend by a distribution of non-cash assets, so we require the carrying value of that. So its carrying value should be regularly reviewed. We have to check whether it is going to be impaired or not, because these things we have to consider. Topic number 4, fundamental assumptions of going concern. This is the one of the main important post reporting event. So first of all, financial statement shall not be prepared on going concern basis. What are these situations? If entities management know that entity ceased to trading or entity dispose its business after reporting period, so in that case management should be bound to do, because non-availability of other source of options. It means that management does not have any other choice to shut down his, to close his business, to close his trading, or dispose of his business because some of circumstances arises. So in that case, it will review its going concern assumptions and also check that if there is a deterioration in the financial position as well as the result of the entity. For that purpose, if management feels yes there is a this is we should not follow the going concern assumption, so he have to make the treatment accordingly. The last point, following disclosure shall be made in case of going concern. It has to disclose that about the preparation of financial statement based on non-applicable going concern assumption. It means that if the management is not following the going concern assumption, so it has to disclose in their notes of account that what are the reason, what are the circumstances under which these assumptions is need not to be followed. Okay. Second thing, awareness about the unfavorable condition which cease to be follow the going concern assumptions. It also disclose that management is aware about the those conditions which are unfavorable for the company, which also make the reason not to follow the going concern assumptions. So these are the two things is necessary to be disclosed in case of going concern. Topic number 5, disclosure in financial statement. So every entity while preparing their financial statement, they have to disclose the date of approval of the financial statement as well as the name of the approvers. Disclose the detail of a person who has a power to amend this financial statement after approval. Basically these are the owner. Update the existing disclosure based on the change in the condition exists at the reporting date. It means that if there is any disclosure based on the condition that exists on the end of the reporting period, but they are by getting new information, they need to change their disclosure as well. Disclosure of the following point related to non-adjusting event. So in that case we have to mention what are the nature of the event, estimate of the financial effect on the financial statement, and if it is not possible to make the estimate, so we have to give the facts, prepare the statement, mention the notes of account. So these are the disclosure we have to make in our financial statement. 5.1 non-adjusting event. I have given some examples. So basically if non-adjusting event after a balance sheet date are material, so non-disclosure could influence the economic decision, so we have to make the disclosure. First of all, what are the disclosure we have to make for each material category? First of nature event I already mentioned. Now we will discuss the example. So first of all, suit filed against the entity for the event after reporting period is a non-adjusting event. Damage of main manufacturing plant due to natural calamity after reporting period, so this is also a non-existing event. Acquisition or disposition of undertaking or subsidiary after reporting period, this is also a non-existing event. Destruction or announcing or commencing the implementation of major restructuring, this is a part of non-existing event. Major ordinary share transactions or potential ordinary transactions after balance sheet date, these are all the non-existing event. Abnormal RAL changes in the assets price or a foreign exchange rate, this is after reporting period, so these are also non-existing events. So thank you so much guys. I hope this session helped you to make a value addition in your knowledge. We will meet soon with a new topic. Till then, goodbye and have a nice day. Enjoy.